Warren Buffett's profound words echo a timeless truth. Do not save what is left after spending, but spend what is left after saving. These words hold the key to financial independence, particularly when it comes to the realm of dividends. In this journey, we'll unveil 3 distinct strategies that align perfectly with Buffett's philosophy, empowering you to live off dividends and achieve true financial freedom. Do watch till the end, as you won't want to miss out on any of these strategies. Before we dive in, I want to remind you to hit that like button and subscribe if you haven't already. It really helps my channel grow, and I appreciate your support. Understanding dividends, the foundation of passive income. Dividends, sharing corporate profits. Dividends are payments made by companies to their shareholders, representing a portion of the company's profits. If you own stock in a dividend-paying company, you'll receive a share of the company's earnings, typically on a quarterly basis. Varying dividend strategies. Not all dividends are created equal. Some companies pay high dividends, while others pay low or no dividends at all. This difference often comes down to the company's strategy and stability. Older, well-established companies might pay higher dividends because they have consistent profits and don't need all their earnings to grow. In contrast, newer or fast-growing companies might pay lower dividends because they reinvest most of their earnings back into the business to fuel growth. Balancing risk and reward. There's also a matter of risk. Stocks that pay high dividends can be riskier, as some companies use high dividends to attract investors. But if the company isn't stable, those dividends might not be sustainable. On the other hand, stocks with growing dividends might be seen as less risky because they show the company is doing well and growing steadily. When it comes to dividend investing, what is your primary goal? Maximizing current income or long-term growth? How do you balance the trade-off between risk and reward? Strategy number 1, blue chip stocks, the cornerstone of stability. Blue chip stocks represent the cornerstone of a strategy that aligns with Warren Buffett's wisdom about financial prudence. These stocks belong to well-established companies known for their financial stability, longevity, and ability to weather economic downturns. Investing in such stocks is akin to building a solid foundation for a house, ensuring it can withstand the tests of time and turbulence. Prime examples of blue chip stocks include companies like IBM, Coca-Cola, KO, and Altria Group, MO. Each of these companies has a history of consistent dividend payouts, offering investors reliability and steady growth. A real-life example that sums up the power of investing in blue-chip stocks for dividends can be drawn from Warren Buffett's own investment portfolio. Berkshire Hathaway, Buffett's company, has long held significant positions in blue-chip stocks, including Coca-Cola, aligning with his investment philosophy of favoring companies with a strong history of profitability and dividend payments. To earn $2,900 per month from blue-chip stocks, an investment of approximately $657,845 would be required, based on an average dividend yield of 5.29% across IBM, Coca-Cola, and Altria Group. What appeals to you about the stability and reliability of blue-chip stocks? Do you prioritize consistency over potential growth when it comes to dividend investing? Strategy number 2, dividend growth stocks, building wealth over time. Dividend growth stocks are a distinctive category in the investment world, especially for those aiming to mimic Warren Buffett's approach to creating long-term wealth. Unlike typical dividend-paying stocks, these are characterized by their potential for consistently increasing dividends over time, counteracting inflation's impact on purchasing power. Prime examples of dividend growth stocks include MSCI Incorporated, MSCI, The Hershey Company, HSY, and Target Corporation, TGT. These companies have demonstrated a track record of increasing dividends consistently, offering investors not just a constant income stream but one that grows over time. While the initial investment required for dividend growth stocks, $1,410,000 to earn $2,900 per month, is very high, the true benefit lies in their dividend growth rate. With a 3-year average annual dividend growth rate of 21.3%, this strategy can be powerful in the long run, assuming an initial investment of $10,000 and an annual contribution of $10,000. Tom could reach his dividend target of $2,900 per month, $34,800 per year, in 10 years with a total investment of $110,000. After 10 years, this investment would be valued at $396,985, showcasing the power of dividend growth and compounding. How important is the potential for dividend growth in your investment strategy? Are you willing to adopt a long-term approach and prioritize compounding over immediate income? Strategy number 3, covered call ETFs, the high-risk, high-reward option. Covered call ETFs represent a more adventurous route in dividend investing. These exchange-traded funds use a strategy where fund managers write or sell call options on the stocks they hold. generating income from the option premiums, which are then distributed to shareholders as dividends. The appeal of covered call ETFs lies in their potential to offer higher dividend yields compared to traditional dividend-paying stocks, or ETFs. However, this comes with the trade-off of higher risk and potential loss of capital gains, as the ETF gives up any gains in the stock price above the strike price of the option in a rapidly rising market. Some of the best-known and riskier covered call ETFs in the market include QYLD, RYLD, and XYLD, with respective dividend yields of 11.6%, 12.71%, and 9.44%, or an average yield of 11.25%. To achieve a monthly income of $2,900 through covered call ETFs, an investment of around $309,333 would be required. While Warren Buffett's investment strategy focuses on long-term growth and value investing, exploring covered call ETFs can offer insights into alternative income-generating strategies. However, it's important to remember that this approach should be part of a well-diversified portfolio, balancing the high income potential with the associated risks. What is your risk tolerance when it comes to dividend investing? Would you consider investing in covered call ETFs as part of a diversified portfolio? Or do you prefer a more conservative approach, a diversified dividend portfolio, combining the best of all worlds? Building a balanced portfolio. To make the best of all three worlds, you can build a diversified dividend-focused portfolio by investing a total of $600,000 split across the three key strategies: blue chip stocks, dividend growth stocks, and covered call ETFs. Allocation and expected returns. Blue chip stocks, 50%, $300,000. Average dividend yield of 5.29%, generating an annual dividend income of approximately $15,870. Dividend growth stocks, 25%, $150,000. Average yield of 2.46%, dividend growth rate of 21.3%, yielding about $3,690 in dividends annually, first year. Covered call ETFs, 25%, $150,000. Average yield of 11.25%. Translating to an annual dividend income of $16,875. With this diversified, balanced approach, your portfolio would be positioned to generate a total annual dividend income of around $35,835, translating to a monthly income of approximately $2,986. How would you approach building a diversified dividend portfolio? What factors would you consider when allocating your investments across different strategies? In this journey, we've explored three distinct strategies that align with Warren Buffett's wisdom, empowering you to live off dividends and achieve true financial freedom. By combining the stability of blue-chip stocks, the growth potential of dividend growth stocks, and the high yields of covered call ETFs, you can create a diversified portfolio that generates a substantial passive income stream. You may also wish to check out my other video on the 5 highest-paying monthly dividend stocks in the link above and in the description down below. What's your favorite dividend stock? Comment below. If you enjoyed this video, do like and share this video so that more people will learn about the fastest way to live off dividends. Check out this playlist of my top 10 videos for creating wealth, and I'll see you in the next video. Take care.